Wonderful good day, ladies and gentlemen, and Denver Gold Forum. It's still going on here in Zurich, and now with me here is Quin, the President and CEO of Midas Gold. Stephen, thank you very much for taking the time. Midas Gold, what is the company about? Where are you working? What are you doing?
We have a large-scale, very good grade development project in Idaho in the United States.
In the States? Yes. Oh, wow. Okay. Is it easy to work in the States?
I think it's more challenging than some jurisdictions, but you have a significantly more geopolitical stability. So it may take you longer to permit, but you still own your asset at the end of the day. You don't have to worry about expropriation. Yeah. And one important thing about our project is it's a brownfield site. It's not greenfields. It's been mined for 100 years. There's open pit mines, abandoned. There's old mill sites. There's tailings. And so a big component of what we're planning to do is, as we redevelop the site, is to clean up all of the legacy environmental disturbance. So we'll actually make the site better than it is today.
Mm-hmm. Yeah, so much more comfortable for the locals, for the communities, for the whole setup, I would say.
Exactly.
Okay, so let's dive into your company. Yeah, you are a gold developer. Yeah, is it gold only or any other metals?
Gold, there's a little bit of silver, but the main byproduct mineral is antimony.
Mm-hmm. Oh,
which is unusual and not very common. And basically antimony, the principal use of antimony is a flame retardant in plastic. So it stops plastic burning. Mm-hmm. So any plastic you don't want to burn, you use antimony for.
And I think it's a great market because it's not that large in the world, but prices are very good.
Exactly.
Yeah, that's like Mandalay is producing gold and antimony.
Yeah, exactly. And likely to get better because China produces most of the antimony, and they've announced that their production is going down because they depleted some of their mines. So they've got less production going forward, but demand continues to grow. So that could increase the price.
Great. So what is the resource so far on your project, and how about feasibility, pre-feasibility? Give us an idea about it, and if you have it all about the numbers also, of course.
Sure. We've done what's called a preliminary economic assessment. It was done in September 2012. We're doing a pre-feasibility study now that will be out later this year. But the numbers that came out of that preliminary economic assessment is we had a 7 million ounce gold resource at 1.65 grams a ton open pit, which is very good grade. And the project life of mine is about 14 years. It'll produce about 350,000 ounces of gold a year at about $450 cash costs. But the first 8 years, we produce 390,000 ounces a year at $330 cash costs.
Wow!
So very attractive, very competitive project.
Do you have an idea what this could translate as all-in costs?
All-in costs are about $660 an ounce, so very good. Because you've got low cash cost, the capital is about $250 an ounce, and then there's a bit of royalties and sustaining capital on top of that.
What would be the capex for the project?
The capital is about $880 million, including 26% contingency. So it's kind of it's a larger project, but the capital is relatively modest for that scale of production. Okay. So the capital intensity is relatively low.
Yeah. Already any ideas about the financing? Because that's quite an amount of money.
Yeah, the good thing is we're not trying to raise that money today. At this stage of the game, we're basically pushing it towards pre-feasibility, then get into the permitting process. But basically I think it'll be a packaged financing. You're seeing a lot of these done now. You'll have some debt, you'll have some equity, you'll have potentially an antimony stream. Would be one of the options that we're looking at in some way to monetize the antimony, and equipment lease type arrangements. And we could always joint venture it. That's an option as well because it's big enough that there's potential to joint venture it.
Makes sense, definitely. This leads me to the financials for the company by now. What is cash in the bank? How long will it last?
Certainly. We have about $20 million in the bank at the end of Q1, the end of March. And that should last us through the end of next year kind of time frame. But if you look back over the last sort of 18-month period, it's been very, very difficult in raising money, but we've raised money during that period. So we've raised approximately $35 million in that time period, despite very difficult market conditions. And it's basically a reflection of the high quality of the asset, that even in bad times, you're able to raise money. maybe a price you don't like, but you're still able to get the money.
That's right. Yeah, that's important to stay in business and to do the things you want to do. What are your main goals for 2014? What do you want to achieve?
The principal goal is to complete the pre-feasibility study, which will be done in the second half of this year, and then get into the permitting process and get that permit process moving forward. Because the most value creation we can do is to have a permitted project. There's a material difference in value between a permitted and unpermitted project. Currently we're unpermitted. Once we get permitted, we should see a significant gain in value.
And how do you see the permit process? I can imagine it's not that easy because you have much higher regulations maybe. Also, let's call it the Greens may have some things against you, or they say, oh, mining is dirty or whatever. How do you see that in Idaho?
The American process is very legalistic, which is good and bad. It is very bureaucratic, but it also has a process that's very well defined. And as long as you follow that process and move forward, you have a very, very high probability of making it through. You know, the principal concern always with mining is disturbance and what are you going to do. The big opportunity here is because it's a brownfield site and it's been heavily disturbed, and there's already a mess there. We're going to go in and not only build our own mine to much more modern standards, but we're going to clean up a lot of that legacy disturbance. So in the end, we clean up a lot of the current problems.
Yeah.
So we're not going into a greenfield site and just making a mess. We're actually going into a mess and cleaning it up.
Yeah, yeah. So making it nice.
Exactly.
Perfect. Yeah, fantastic. Yeah, so I would say all the best for that. And we hope to hear some good results then about the feasibility and the progress of your project.
Great. Thank you very much for the opportunity.
Thank you. Yeah, ladies and gentlemen, that was Stephen Quin, the president and CEO of Midas Gold. You heard it. Unbelievable project, unbelievable numbers, I must say. Fantastic, $390 to $450 cash cost. All in, something in the stage, let's say $650 to $700. And $880 million of a capex, but this sounds manageable with those fantastic cost numbers. So have a look at the company, check it out. Thanks, and bye-bye from Zurich.